For this case study, LYFT stock chart provides a good example of a newly listed stock, having only traded on the market for less than a year at this point. Not much time passes when several stable trend lines can be drawn to form a clear channel. It is a very shallow incline to point at the possibility of a stable bullish reversal. However, take a look at the volume. It's not exceedingly green, high, or consistent, and the overall context so far is a very bearish start for this stock. So it's not much of a surprise when the lower boundary of the channel is eventually breached, and that is done with significant increases in bearish volume and price action. That still displays a minor pause prior to the break lower. It is certainly a situation where the longer term context is bearish right from the start, literally here for the IPO of LYFT stock, and although this was a stable upward channel, it was a relatively weak bullish move, both in terms of the price action and volume. Even without the benefit of hindsight, it was quite apparent before the channel was breached. There was renewed bearish sentiment that was drastically increasing from these rows of sharp lower red candles closing towards the lower trend line with drastic increases in volume. So if you think back to the conceptual diagrams of price action and volume at the beginning, right around this point is when the market tips back into a severely bearish tone. Closer to April, the market is showing signs of a developing uptrend. However, an upward channel can't be drawn yet, because the incline from these upswings will be too steep in comparison to the upper trend line, which is at a more moderate angle from these two downswings. But within a short time, several swing points develop to form a fairly moderate channel similar to the previous one. The trend lines are relatively parallel, but of course not exactly parallel with identical angles. That can be seen visually without even measuring the exact angles. This is much more apparent when the channel develops more. The bottom trend line is noticeably steeper than the top, but it's still a fairly moderate incline, much more gradual in comparison to the original upswing points that were forming this uptrend at the beginning. This is why, like the first channel, this lasts for quite a long time, about 3 months, and why it is able to contain some short-lived periods of volatile price action and increases in volume. This upswing and this upswing, along with this downswing, are quite volatile, rapid fluctuations in price in a very short time, and here there's even high volume, but the channel remains intact to develop further, where here there is also an increase in volume that remains quite consistent to poke over the upper boundary for a short time before falling back into the original incline. And near the end here, there is a slightly prolonged pause, as would be expected from the supporting influence of the trend line. It also goes to show that volume, while it's not exceedingly high, it's actually near normal levels for most of the time. It is consistently bearish, and that constant selling pressure is adequate to slowly breach the lower boundary of the channel. Regardless of the market or chart or the exact price structure being examined, there will be contention around areas of support and resistance, in this case for the resistance at the upper boundary and support at the lower boundary of the channel. There are swing points, pauses, and increases in volume, along with breaches of the trend lines when there is consistent volume but not necessarily significantly high volume. And like individual trend lines, often when there is a clear swing point or when there is a definitive breach of the channel, this occurs in conjunction with a horizontal support level or range. And that's not surprising. These areas will be contentious no matter how they are identified, whether they be outlined with channels, trend lines, or horizontal ranges. It all goes back to the original conceptual diagrams of price action and volume. Essentially, whenever there are swing points within these channels or when they were breached, the market was tipping over, and that is shown by the clear price action and volume.